Hi, this is Randy Finney with the right side of the chart, and this is an early session update for Tuesday, November 12th, 2019. What I'll do here is I'll start out with just a very brief overview on the broad market and then just cover some of the trade ideas that I've highlighted recently. Time permitting, I'll do an update on the precious metals as well. I want to do that right now. There's not really any hard buy or sell signals, but I do want to update those. I know there's always interest there, and there's also some potential on these things. So let's start out with the hard trade ideas, meaning trade ideas whether they're official, unofficial. We've had clear entries, clear buy triggers or sell signals recently. We'll start out with the broad market. Again, just a quick overview. Nothing has changed now for a while as far as the technicals. I can just extend these divergence lines out, which I'm doing here. As we inch on to make new highs on fumes as far as you look at the volume lately. And what I did, the only other thing I've done recently is added a trend line here, an uptrend line right here off the lows. There's a reaction low right here on October 3rd, and so now you come in, you have several reactions. You can see you have one right there, there's the bottom of a candlestick there, two, cluster of three, and then more recently some reactions. So there's a trend line to watch, and again this 8200 level is the big level as well, so I'll just make that line a little thicker there. And so that might be an early sell signal. Hey, heads up if you especially come through there impulsively and then again break 8200. And I actually on the front page last night under a comment section, somebody asked about the comparable levels on XLK, which I did. I posted that chart with some comparable levels and potential targets on XLK and QQQ as well. But I've been focusing, and that's my preferred pullback target for the next correction whenever it sets in. We don't have any sell signals now, but if we get those, looking for a move down to that 8040, 8050 target zone, and I'm actually leaning towards now continued move down here to about that 79, 78ish level right there on NQ. That also aligns pretty well with some levels on here. I'll show you those. Might as well do it now. XLK. And QQQ. You can see here you have a support zone that runs about 83, and that's really where that 8040 level is. I believe that was my response last night on NQ, but there's XLK. But you have pretty nice, even better resistance. There's a reaction there just on the left of the chart, about 8258, and you can see a nice clean rising wedge pattern. No sell signals yet. You need to break that trend line there, at least, at the very least. And then QQQ. So what I've done is highlighted kind of the pullback potential targets in blue. Let me add another line here. I should add one right about here as well. That's comparable to that level I just showed you on XLK. So there it is. There's your potential targets. I just get them out in advance. If you want to mark those up. If you do break this, because sometimes, quite often, things happen pretty fast to the downside. If we get sell signals, you can probably take a headline to trigger that. Remember, the news and the fundamentals go hand in hand. Sometimes one will follow the other, sometimes the other way around. But usually there'll be some kind of type of catalyst. What I'm watching for this week, tomorrow, I believe it is, on the economic calendar, I'm interested. It's not been a market mover for a long time, but the CPI, expecting or suspecting, I should say, sooner or later, we're going to start to tick up and get some increasingly hot numbers on CPI, and that's going to change things, create a different dynamic for the Fed. They've had carte blanche to flood the market with free money and near zero interest rates for a long time because of the fact there hasn't been any inflation. Otherwise, a lot of their metrics have been hit for the point where they said they'd start raising rates, as far as low unemployment, price stability, everything else. Okay, and on to a few recent trade ideas that I've highlighted recently. Clovis, this was one, an entry. Like I said, that one I got it out as an unofficial trade that day. Broke out the other day, reported earnings right here, and then whatever, doesn't even matter whether their earnings report was, rosy or gloomy. I've seen rosy reports and a stock sell-off. I've seen gloomy reports and a stock rocket. But again, the only thing that matters is what's the street's reaction, and this one was just a big follow-up green candle on high volume. So what I wanted to update is I did make mention yesterday. Somebody asked for an update because it was down yesterday, and remember, if you go here, you can type in the symbol. If you want to know if there's any updates, easy way to find it on the site, do that. You'll see I did make an update yesterday, and what I said, it was a trading room reply. Somebody asked about it in the trading room, and I said, it still looks good. It was taking a breather. Friday, it was a huge rally on Friday. Nothing goes straight up forever. It's not, in fact, it's healthy to get correction. So I said, as of yesterday, that pullback was down 6.5% as I was typing. Didn't appear to be anything more than a near-term overbought pullback, and so far it only retraced a small part of the leg, from the previous leg up. And again, I went on to say that doesn't mean it can't be the start of a much larger drop, but ideally, ideally the stock should hold above the $5 level and would offer another objective long entry with a stop somewhat below if it gets down near there. And so let's take a look at that. So that was yesterday. Here's the pullback, the red candle, and I said, so far so good, because it's never even made it all the way back to 5, but there's that level. And again, if you're in this one, you can see it's pretty decent support. It was the first, I believe, the first target that I had, and then that 620, remember, revised to the second target. So that, of course, I mentioned booking half profits right there the other day at 620. And then again, if you're in it and you're holding out for additional upside, that's where at this point I think ideally the stock should, you might want to give it a little bit down through there, and you want to round down to maybe $5, because it's a very volatile stock, up again 7.25% today. So this is the nature of the beast. You have low volatility on a stock or security, just like the stock market right now. Small price, small candles, and then when you break out, usually volatility will expand, meaning the daily price swings. So 7% daily gain, or even a 10% round trip in a stock. This particular one at this point is par for the course following a breakout. So again, just ideally keep above that level. Next targets needs to punch above the recent highs at 620. Maybe, of course, it helped to take out yesterday's high, and then you can see the additional potential targets on this one. I had typed in, I was searching for the term. I had replied to somebody the other day that talked about, small, lower quality stocks coming up, and yes, this is what I refer to this as a dash for trash. Everything's catching a bid recently, and my reply is, on that is that's what I'm playing. Clovis was a just beat down biotech stock. This stock fell from $30 down to about 2 and change. And so as long as the music is playing, I equate this recent run up in the market like a game of musical chairs. Music's playing, great, get in there. It doesn't, fundamentals are being cast aside. It's a lot of this low price, low quality, these low quality stocks are posting much larger gains in the market now. People are chasing risk, and as long as that trade is active, you can make money on it, but you just have to be careful. Again, it's like a game of musical chairs. As long as the music's playing, everything's fine. You just don't want to be the last one standing when the music stops. And what I mean by that is, we'll keep an eye on these stocks. What I'll be looking for is an increased rate of failed breakouts. We're going to get to that. A couple of these trades. Let's move on to some of our other trades. Again, I'm going through these in no particular order, just as I have them scratched down here. This one's an official trade. Looks fine. Nothing really much to add on this. It's been up every day since we entered that, I believe, whenever it was. You can see, just green candles so far, and it's right now. It's smack in the middle of. It's in no man's land. That's what I call when a stock is between support and resistance. There's a minor resistance level right here. I'm going to add that, and I'm queuing in on these reaction lows. This reaction low here, another reaction low around about there. So minor resistance there, but we're halfway between really this pretty important $10 level there and the first target. So really nothing to add to that. It looks fine for now. Overbought can certainly become, and often does become, more overbought after a breakout. If this overbought reading came, let's say, within a price channel, trading range or something, I'd be more concerned than I am now. Again, the optimal entry was over here somewhere, but I just want to mention so far so good. And if it hits that first target, that'd be a good time to raise stops if you're holding out for the additional targets. So that's CWH Camping World. NEOS. Let's talk about a few that this one, did we trigger? Yes, I believe we did. I have one that's a setup. I'm trying to recall which one. Oh, it was PBYI. I'll get to that in a second. Okay, so here's an example of a failed breakout. Now, it's not enough for me. I'm going to stick with, I've learned, I'm passing along a tip, in trading, and I get a lot of questions. Hey, should I sell XYZ? I'm in this. Have a trading plan before you enter a trade. That is paramount. That's like one of the golden rules in trading. Have a plan. What are you going to buy? Why are you going to buy it? Where are you going to buy it? Where are you going to sell it and take your profits? Where are you going to stop out if wrong? And so once you have a trading plan, which you should have before you enter a stock, and that's again what I lay out, the parameters on an official trade, I find it best to stick with your plan unless something very compelling changes in the charts. Now, yes, is it a failed breakout? It is, but it's also the stock is still in a near-term uptrend right here. I have it below this downtrend line. It's a decent trend line. It's pretty good actually, but it's again, it's not enough. There's still a cluster of candles here. It's still trading above, and sometimes you break out, come back in, maybe even pull back to another test the bottom of the channel or the triangle and move up. Either way, like I said, let me be clear on this. Now, would I enter this one now? No, I would not. If you're new to the site, or you were watching this the other day and didn't take it, and yes, it's a better price now than the breakout, but I would not take it because that's a failed breakout. So there's a difference. If in it, I would stick with it. That's just me. Stick with the stop. Trading plan's a plan. It may certainly play out. I've seen quite a few that breakouts didn't immediately follow through, and then they did later on. But that's not ideal. Not what you want to see. You want to see a follow through with an additional green candle, more upside after a breakout. So hopefully that's clear. If I didn't own it, I wouldn't take it. But if I'm in it and I took the breakout, I would sit tight and do that over enough times. More often than not, the trades will play out, and you'll be ahead. And of course, like everything, don't put all your eggs in one basket. It's just one of many, many positions. Should be. ACOR, Accordia Therapeutics. This one, I believe, there's another example of so far a failed breakout. Now it broke out, it ran up, and it hit that first resistance level right here. Did it hit our first target? 263. No, we came 2 pennies shy right there. And it did have a follow-through green candle, stayed above the trend line, even stayed above the trend line the third day on that red candle. Fourth, back testing. It's down below. So there's another example of I still like the pattern. I like the divergence. The fact it had a failed breakout does increase the odds it'll be stopped out. I'll say that now, but it's not enough in the charts right now for me to want to change the trading plan on that one. So it's tight. Maybe it's flagging here and it'll thrust up soon. The market's certainly moving up. It has the wind behind its back, or under its sails right now. Any stock does. But yesterday the biotech sector was down. Maybe it is today. I don't know. Let's see. And remember, birds of a feather flock together. No, biotechs are up today. They were down yesterday, and that was a cause for pressure in some of those. So either way, an update again, same story. I wouldn't take it. This one, in fact, what this one would need to do from this point is take out the recent highs right here to be bullish. Yes, that's going to put you right at the first target, but if it can do that soon and do it impulsively, that would open the door, I think, to a move up here to this third and even fourth potential target zone. So it's ACOR, still an active trade, but not one that I would add to or suggest taking at this point. It needs to show a little bit more, especially after the failed breakout. PBYI, again, this is a setup. There is a colossal difference between a setup and an actionable or active trade. A trade setup is a stock pending an entry. It needs to break out. This one's working its way in what appears to be a falling wedge type pattern, and it may break out any minute now or any day now, or it may not break out, or it may just work its way down within the wedge and then break out later. So forget what the trade trigger is. I think it's just a little bit above $9 if I recall. I'd have to pull the notes there. I don't believe it's triggered yet. I'm almost certain that's a setup, and maybe it's flagging there too. See, this is an impulsive move up here. You can see that stands out to me when I look at the daily chart. But if you see something like that and then you zoom down to a 60-minute chart, what I just did, this is called a bullish pennant pattern. Now, like any chart pattern, it's a potential bullish pattern. We call this a continuation pattern. You have an impulsive move up followed by a level area or a period of consolidation. Typically on a decreased volume. It's exactly what you have here. You have high volume. You can see down there, or barely, and maybe you can make out the bars. So it textbooks so far, but the only thing you need you got it. You got to throw in the breakout. Any chart pattern, no matter how bullish or bearish it looks, is only a setup until you get a breakout. And a breakout would come on an impulsive break above the top of the bullish pennant pattern. And then typically you see impulsive buying, usually on a bull flag or a bull pennant, in this case the pennant. You see the impulsive move up, then a breakout followed by an equally impulsive move, and the measured target is the distance of the flagpole added to the bottom of the pennant. So there's a lot of potential there, and that's nice because that potential pennant would line up with a breakout. So if we break out there on the 60-minute chart, you'd also have the the $9 level there, and then of course you have your targets right here, potential targets on that one. And I believe I passed this one on recently. Is that it's still an unofficial trade setup. It needs a breakout. Here's a downtrend line. This is ROCF, Orocobri, I believe that would be, and it is a they're based out of I believe they're based out of Australia, but they have mines in Argentina, and they also own a stake, about a 35% stake in Advantage Lithium Corp. So they're a lithium miner, and I did a video recently. I'm watching. I need a little more work to be done, but I'm watching the lithium stocks. I have quite a few that are setting up bullish. Big difference. They're not actionable. They're setting up. They have similar charts. They've been in a prolonged downtrend. They have positive divergence. Quite a few have trend lines or resistance levels. Again, that video was a few weeks back. You can type in under the ticker, search by ticker a box. You can type in LIT. That's a lithium ETF. In fact, I'll show you that real quick. I mentioned that here. The lithium ETF did broke out of the minor downtrend line. This is where I covered it back here. It went on then to break out of the secondary trend line, taking a little breather today. So we've seen a lift in the sector. And again, I'll be watching. I just shared showed you one of the trade ideas that I like in that sector, and maybe I'll do another follow-up video. Need to see a little more work. That's why I haven't done a complete follow-up on that sector yet. Let's see, any others I want to cover? Yes, Joe, the last update I did on Joe was right here the other day, November 7th. And at that time, in that video, this right here is covered. You can see the ticker tags down below right there, Joe, J-O. And in that video at the time, I mentioned that we were at the target. It's still an unofficial trade, but as I often say, official, unofficial, tomato. I liked it all along and highlighted it since the bottom. I just never got around to adding that as an official trade, but I did mention in many of the follow-ups since highlighting the breakout down here on the 60-minute chart of KC coffee futures, that I'd be targeting the same targets for the last trade. And then when I did that video right here, it was right here, I said it's at that third target area. There's a big old gap right there, some resistance, and I said you probably get a pullback, and that's what's happened. So so objective time to take some profits, just like it was back then. And I think I mentioned that at the time as well. And we got out. We did it here again. T3. I told you I expected to pull back when that was hit. And this time we got it. Now look, this is where we're at. We're at uptrend line plus price support is a little below. So it's an objective entry. Here's one where you shouldn't have taken, if anything, you should have taken profits or tightened stops the other day. And now at this point, this is an objective add-on. You got trend line support with price support a little below, about 35.80 or so. And next support, even better support down below at about 33.88. So you take it around here, or add to a position if you're a long-term trader, and I'd set a stop a little bit below that 33.82, or you could have a more aggressive stop. It's up to you. Depends on your stop allowance. But that's it. Took a breather. Might need a little bit bigger breather like it did back here. Nothing goes straight up forever, and in fact, that's about a comparable run. Now it doesn't mean just because they're these runs are comparable that you're going to have an exact. Nothing ever plays out exactly the same. I just want to point that out. I'm just trying to make that case that that's usually things move in at least a three-wave pattern. If it's a corrective wave, an ABC wave, and this would be something along those lines. And maybe that's it for the correction. Maybe it's going to be a little bit more. I just wanted to point out some objective levels to trade off, both to buy into and then to set a stop just in case that's the end of the run and we go much lower. But as of now, I still like the longer term outlook, and I'm liking a lot of the ag commodities. And again, that's why I think we might start to see a hotter than expected number. I've seen quite a seems to me there's been quite a big uptick in inflation, both in housing, which is a big component, prices, rents been through the roof from what I've heard. Of course, energy, oil's been moving up, and of course a lot of these ag commodities as well. So I'd be surprised, but again, we'll see. And then finally, let's wrap it up here with nat gas. Yesterday I posted likely reversal on nat gas anywhere within this 264 to 260 support zone, this yellow box right here. Favoring reversal here around the top of the zone. So there was an objective entry anywhere all the way down to, but not below 260 on either UGAS or NG futures. So that was then. This was the update today. So from there we went a little bit lower, almost a perfect tag of that 262 level, which is right smack in the middle of that support zone, and we reversed. And I have convictions, I will tell you, and I said that when I did this, that my convictions weren't that high to begin with on the bounce, not high enough. I mean, high enough that I took a position, but not high enough to add it as an official trade. But again, it was thrown out there, and I know a lot of you guys, I jokingly referred to you as nat gas junkies. I'm a nat gas junkie too, through and through. So it trades well, and it's puts quick sharp gains. Either way, my convictions weren't high. That's why I don't like to throw out tons of different scenarios, but I said, look, this is a resistance, a back test of the trend line, and I really had no idea whether we'd reverse here, come on up to that 272 target, bottom of the gap, or maybe even continue up 278 or higher. So I said at that point you can either book profits or tighten up stops, and that was this morning in pre-market. And from there, if I can find the chart here, there we go, boom, that was it. Pull back. So you either had a chance to book profits on UGAS or NG futures, or raise your stops at that point, and you would have given back a little, but you would have sidestepped this, what so far has been a give back of about 2.5% or 100% of the gains. Now it's back at support, I'll say that. It may just be a reaction off here. So watch, rinse, repeat. You say this right now. If you did book profits, or you weren't even in this trade, you're just kind of watching, it's back to support, and that's another objective entry. And even down to, you could add down to that 2605 level with a stop somewhat below for another long entry. Now we've already had a back test, so if it came back up at this point, what I think it would do, if you want to know if you do like it here, I think it would come up and you get another back test, but another back test of the trend line would probably coincide with that 272 target. So that'd be a pretty nice trade there. And again, it's all about risk reward. You're risking this much downside, whatever it is, from 262 down to just a little below, give it a little below 265, 260 I mean. You're risking that much to make that much, or possibly more. Like I said, you can just trail stops up as a trade, if and as the trade starts to pan out. And this may be the next leg up, because I've made a case quite a while ago that this whole leg down was the first corrective wave. Here, let me show you that in a new uptrend in natural gas. Okay, I believe it was this chart here. This is a daily chart of nat gas future. And back here I pointed out the divergent low. I made the case for a long entry, a divergent low, positive divergence, oversold conditions, yada yada yada. Everything that you want to see went on to break out of a bullish falling wedge pattern. So again, we just flipped from a shorter term intraday chart, a 60-minute chart, which is my focus, my primary go-to chart for active swing trading, out to the bigger picture here, which says here's nat gas, put in a divergent low, broke out of a clean big bullish falling wedge pattern, had a first leg up, about a 34% rally and corrective wave. So that's when I made the case back here for a long, and that was exactly when I posted. It was right about here. You can type in, search the symbol for $NATGAS or NG, will bring that up to about this time. And then there it was. That was the next leg up. Now, as you guys know, equal opportunity bull bear, doesn't matter to me. I have no bias. I'll trade, and I trade this one long and short, probably an equal amount of trades on each. I don't care whether it's in a primary uptrend or downtrend. The rips and dips are very lucrative to trade, even if you're doing counter trend trades. So again, bigger picture on that gas simply is this. Breakout, first leg up, first wave, I should say, in a new uptrend with a corrective wave, which we were able to capitalize on that as well, and then followed by next leg up, and we capitalized most recently on this pullback here, this correction, because again, the case was made for that last short trade on DGAS. We had negative divergence right there, and so I was looking for a pullback trade, but that may be it. And so the point is, this may be, we were overbought, divergent high, and maybe we get the next leg up here. And these are all, they were former levels in the past. They're potential targets, and nat gas has a tendency to rally around year end. I have a chart I've showed you guys before in the past. Year end of year seasonality. I don't know why this thing went away, but keeps changing the time frame. I have it on. There it is. These are day break lines. Year break lines here on this one. And so here's going to be the next year break line. That's about the end of the first of the year, 2020. And you can see that, as I said, usually the rallies either come, quite often they come before the end of the year. Of course, you have winter and there's a higher demand for natural gas for heating. And sometimes they come after the first. They're pretty decent. You can see I've measured them out here. They run about 50% on average, and so far we're a little away from the end of the year, or the end of the year. So there may be more. This may be the rally, or who knows? Maybe we fizzle out here and then have a rally at the end of the year. But based on the charts, where I'm going with this is based on the chart I just showed you. I think the case is made. Has been made here that this was a major bottom in that gas, and it could be with more upside to come. So like I said, all goes back to the trade I just or the 60-minute chart that I've been focused on almost every day. If you get an entry here and it starts to pan out, like I say, you can either take the quick buck and get out. That's usually it's nice. There's something nice to be said about getting in, getting out. Get 3%, 5%, 7%, whatever it is on NG nat gas futures. If you trade them, that puts quite a bit of money in your pocket. Probably $1,000, on a few percentage points gain per contract, and you get in, get out, or you hold out for the big move like this, and you put a lot more. So it's up to you. It's up to you how you do it. The tough decision is when you approach a level that you suspect may be the end of the run, or at least a good correction. If you're going to tighten your stops, you do run the risk that you have a little kickback and then you continue on, you get stopped out. And that's just part of the game. There's no easy way. All I can tell you is the wider the stop, the greater chance you have of remaining in a trade and not getting shaken out from the larger trend. But you risk a bigger give back in profits. The tighter stop, you have a higher chance of getting that stop clipped with the trade going on. And again, my convictions weren't very high, so I was to me, that's what I did, is just took the money and run. I had real tight stops, and they took me out, but that's it. And I may re-enter that after this video. I'm going to look at this. Not crazy about it now. I'm going to watch nat gas for right now. So enough on that. I'll, like I said, if you want to take it there, I might go back in later today, but I don't want to overtrade. I don't see my convictions aren't that high right now, so let me just move on. There's the levels for you guys if you want to trade it. Okay, I'm going to wrap it up here, and I'll do separate updates on the precious metals, gold, silver, platinum, and palladium. I think they deserve another separate video dedicated to themselves. Maybe we'll look at the currencies too, the US dollar and the euro as well. So we'll wrap this up here. These are some of the things that I've been watching lately and highlighting on the homepage. And if there's anything else, I am scouring the charts for objective entries. And I'm just not seeing a lot of very, setups that I have a lot of confidence in right now. I don't want to overtrade. I don't want to force things. Volume, like I said, is what I think to be suspiciously low right now on the rally in the broad market. So you have a very clear uptrend with no sell signals. No reason to be short or fighting the broad market now, or really most stocks or sectors, because it's a broad-based rally for the most part. Yet, don't I'm just not comfortable enough joining it, and nor is there enough meat on the bone. We're kind of inching up every day in this low volatility, low, relatively small gains each and every day. So I'll sit here and trade natural gas for, 3, 5, 10% trades all day long, put more of my focus here, for example, or some of those biotech stocks, healthcare stocks. Why try to squeeze water out of a rock? Try to make 2, 3, 4% in the broad market over the next week or two. It's just not worth it for me. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.